them today. And then in Dubai, we were on another yacht. Like, guys, I'm telling you, if you're with Roy, he will take care of you guys. Like, he really takes care of his people. So, please come if you can, guys.
That's awesome. Christine, I appreciate that. But quick question for you, were you at all hesitant before you spent money on the ticket, sort of pull up, or just like, I mean, the flight and everything else? Was there a little bit of hesitation, kind of thinking, is it going to be worth it? And then if so, then what was kind of your final experience there?
I wasn't hesitant because I saw the value when you kept winning back to back. Like, that was enough for me. So it was like, okay, this guy knows what he's talking about. And I came from that kind of background of network marketing. So for an event, I'm like, I know the value, you know? So I wasn't scared. But I didn't expect, like I said, to make so many connections and like real friends in the industry and meet real powerful people in the industry. Like we had licensed traders there, like real licensed traders there who came from corporate America and who were just sharing their knowledge. Like I could go on and on. But
Yep.
Roy, I'm looking up the tickets. What's the symbol for Columbia Airport?
It's a MED, so it's Maria Cordova. That's going to be like the closest airport to downtown and all the venues that we're going to be hosting events at. So it's MED.
Okay, thank you.
Yep, December 2nd to the 4th. We're going to be down here. Now it's going to be a slightly different show. Christine, I know you're used to like the 3 days, third day's a half day. You know that we've learned from every year, right? Like the third day, everyone's showing up late. And so we're gonna be like starting later on every subsequent day. The last day, we're gonna do a half day, and then the second half is gonna be all VIP stuff, like workshops, personal meetups, and things like that. So very excited. Now there is gonna be like one condition. So a lot of the folks that are coming from the US or from international, we're going to be doing a hybrid translated event. So basically, like if you guys think about, if you ever seen like a video of the United Nations where everyone has a headset and they're doing the live translations, we're doing something similar because we want to make sure that we bring some of the most qualified people to come and speak. So we have the top five crypto exchanges in the world, Binance, Crypto.com, KuCoin, Kraken, Gate.io. We have the top five brokers in the world between Exness, Pepperstone, Black Bull, Ava, like some of the top in the world. We have MetaQuotes. We're still working on FTMO, but I think we have a lot more success now, or we're going to have a lot more success now that they've entered the US market and then they've bought Awanda, which is crazy. And so we're trying to get the top five of everybody. A lot of these folks will be English speakers. We're going to try to do a translated event, both visually, live translation captions, and audio. So hopefully you guys don't mind that too much, but we will be bringing together the most qualified speakers possible. Okay, let's jump right into the Sunday Outlook. Welcome everybody who's watching on YouTube. We're just talking about the FX Summit conference that we host every year. If you guys haven't checked that out, click the link in the description. And of course, welcome back to the FX or to the Sunday Market Outlook. Okay, so the purpose of these outlooks is to help you prep for the week. Is two parts. One, overall context. So we go through the data releases that we're expecting and sort of a big picture overview of what are the main sort of like focal points of the finance or economic space. Right now, we basically just have three. We have the Fed meeting minutes dropping this week. We have the Fed meeting coming up here in about 2 weeks. So the rate decision, very big driver. And then because of the government shutdown, that's the third one, we're going to have a lot of delays in economic data releases. So when the government shuts down, only essential services stay open. This happens every year, and like if anyone's new to politics, every time that this happens, people start to panic, and they sort of like, oh, the government is shutting down. We're not going to have data releases. Now, on top of that, the actual services, the government representation, all of these essential features of our government are now on pause. And so people start to panic and think that this is some kind of unique happening. You're going to hear a lot of talk about the government shutdown over the next few weeks. I don't expect this to be a short shutdown. There's a lot that Congress is trying to kind of iron out. And this is basically what the shutdown is for. It's which side is going to feel more pressure and cave first because their constituents need services. And if those services are not met, then they're going to blame their representatives. And so this is basically like every year, we get very close to the maximum budget that we're allowed to spend because non-essential spending has to be approved through the Congress, right? This is kind of like an age-old rule where you can't just spend tax dollars on random shit without the people's representatives, aka Congress, voting on it. Now, when we can't agree to either run off the debt or to sort of increase our budget, it's like basically the debt ceiling, which is how much we're allowed to borrow from the Fed, how much we can spend this year. If we don't increase that, then we have to default on the debt, which we never will. At least, you know, because we're screwed. If we had a real president or a real Fed chairman or a real Treasury secretary, maybe we could get to that point at some point, but not today. So long story short, Trump has the record for the longest government shutdown in history, which means that he typically uses these opportunities to negotiate some of the policies that he's trying to push through by putting pressure on the opposite side, shutting down the government. Those people's constituents back home in their states call in, put pressure on those congressmen, and they all fold. And so, long story short, this is going to last a while. The only implication to us as traders is I've seen this every single year. There's going to be a panic, and then there's going to be a massive, massive recovery. So, let me put this very simple for some of you guys, mostly the YouTube folks. Let me put this in plain English. Fed shutdown equals buy the dip. Now, CA members, put that in the Zoom call real quick because I don't want to have to repeat myself 50 times just for somebody in the chats to say they don't know what's going on and they're trying to short and there's all these right? Just put this in the chats real quick. Say government shutdown equals buy the dip. There's always a panic. And while you guys put that in the chats, I'm going to kind of explain some context. There's always a panic that happens because of government shutdowns, because uncertainty leads to sell-offs. The sentiment that, like, market sentiment is what mostly drives bullish and bearish action. You either have risk on sentiment where investors are willing to buy risky assets, meaning crypto, stocks, basically any high risk assets and high reward assets. And then there's risk off sentiment where investors typically want to go into a safe haven, get on the sidelines, and wait things out. So government shutdown always kind of starts as this sort of bearish, I don't know what's going on, uncertainty, which leads to a risk off sentiment. And then directly after, people realize this happens every fucking year. This is not any different. And actually, because of Trump's policies with tariffs, sort of reducing the government, he's not reducing the government debt. Let me just throw that out there. But with the tariff revenue that we're bringing in, this actually will be a much better situation than we've had in the past. So long story short, if in the past we've had this big dip and then we had a massive recovery, then this should be no different. In fact, this should actually be whatever we've seen in the past on steroids. Okay? So just as a point of education, how do you guys master markets? How do you master these large scale fundamental events? If you don't want to be a scalper or a day trader, you want to be a swing trader or position trader, you want to be the next Soros or whatever it is, what you need to do is start looking for massive shifts in either central bank policies, so there's central bank divergence between two different countries, or there's sort of this arbitrage opportunity where you can make money on the difference between two different assets, one asset, or some policy. So to put this simply, if you guys want to learn how to trade these events, you'll look at the Fed or you look at the government shutdown for the past 5 years. And what you'll do is you'll go on the monthly or the daily chart, or sorry, the monthly or the yearly chart, and you'll go back to every one of these government shutdowns. You can look it up on Google and say, what months or dates was the government shutdown in 2024? Okay. And it'll tell you October 1st to September 30th. Okay, that's not correct. That's the fiscal year. Okay. The most recent government shutdown began October 1st and it's ongoing. Okay, well, that's the past 5 days. Okay, just for the sake of timing, you'll go on ChatGPT or Grok or one of the other AIs, and then you'll ask them that. And then what you can do, because Forex Factory, doesn't exactly have government shutdowns on some of their data releases. What they do have is basically every other data release known to mankind. If I can filter this. Okay. So what I can do is whenever I'm trying to study a Fed meeting or some kind of labor report or something that happens every single year that's a big mover, let's say it's a Jackson Hole or something. And what I would do is I will just go here. I'll show you this real quick. So let's just say that we want what's the biggest event this week? It's obviously the Fed meeting minutes. Okay, meeting minutes right here. Okay. So then you can go through and look at the previous meeting minutes. Let's say it's August 20th. You'll click August 20th, and then you'll see the expectation versus the actual. And then you'll go to the live chart, and then you'll go back to that date specifically and see what was the reaction. What was the reaction a few days before? What was the reaction right as the news event released? And what was the reaction, the rest of the session or the days preceding that event? And if you guys are willing to put in that work, there's nothing that can escape you in this game. If you're not even willing to go back and look at a date and go back to that part of the chart and sort of study, then honest to God, guys, I love you to death, but you should not be trading. This game just isn't for you. The bare minimum is just fucking look to the left, look at the historical data and find patterns. If you're not willing to do that, this market will take everything from you, including your sanity. Okay. Put a one in the chat if we're good to go. Half of the people on Zoom answered it. So what I'm going to do is I'm actually going to kick out everybody who didn't respond on Zoom real quick. So we got Christina answered it. Awesome. Bobby, appreciate your insight. Frenchie, two-step, don't even worry about it, Brody. I'm not going to kick you out ever. I know you're working, always. Fed shut down by the dip. All right, good stuff, Frenchie.
I'm driving.
Yo, wait, who is that? Is that two-step or someone
Joshua.
else? Oh, JLP. Are we good, baby? Look, if you guys are working or driving, specifically driving, don't fucking send a message. All right. I'm not going to kick anyone out. Let's just, the last thing I want is for someone to be trying to like type a message while they're driving. Guys, focus on the road. We'll be good. Okay. Here's what we're going to do. Let's go through the high impact data releases for this week. Then I'll go through my trades of the week. And then last but not least, I'll kind of break down some of the impacts and some of the expectations here. The biggest question, by the way, if you guys are trading US markets or you're trading any US equities, specifically NASDAQ, US 30, is the interest rate like sort of schedule for the Fed, right? If the Fed is going to give us, the expectation now is the Fed's going to give us 2 rate cuts this year. If the Fed, for some reason, caves, if they fold to Trump's demands, then we might actually get 3 rate cuts this year, which is going to drive the markets to absolute, like to the moon, to Mars, right? The US equity markets will go extremely bullish if we exceed the expectations of 2 rate cuts. So all the other shit that we're going to talk about between now and then, very interesting. These data points are relevant. They do add up into a big picture, but the interest rate is the single most important thing and the biggest driver, if not the only driver, of serious movement in the U.S. equity markets, U.S. 30, NASDAQ, and S&P. Okay, this week we have FOMC meeting minutes, which is basically kind of like a breakdown of the discussions during the Fed meeting to discuss the interest rate. It's all bullshit. These guys aren't talking anything specific, anything contextual, or anything that they would release publicly in these meetings. It's all backdoor stuff. It's all private meetings. This one is just for show, and they'll put out the information that'll sort of show, like the Fed has a lot of representatives, especially the FOMC, and there's always something called dissent, where some people disagree with Powell's decision, but Powell has the final say. And so people look into the meeting minutes to be like, oh, FOMC member Waller or somebody else is dissenting, meaning that there actually isn't this kind of consensus in the Fed, which means that later they're going to change their mind. Now, Jerome Powell has shown us that since his tenure at the Fed, he's been consistent. If he makes a decision and he kind of says that we're going to be cutting rates slowly, then regardless of who dissents, he's not going to fold. You understand? And so The meeting minutes, completely useless. If you guys want to see what happens typically with meeting minutes, it's like a short-term fake out and then a continuation of the overall trend. All right. If you're listening, you took notes, congratulations. You know how this week is going to go. All right. It seems like something happened here with, ah, there we go. Let me reapply my filters. Let me remove all non-high impact events. And let's see what else we got. So we have weekly unemployment claims. It says tentative here. Tentative means that it could happen throughout the day. Because of the government shutdown, a lot of the labor reports, inflation reports, basically all government data is put to a halt, right? And so until the government shutdown is done, that's why we're going to see these tentative sort of releases, and it's going to create more volatility than expected. But keep in mind that institutions pre-plan their market movements. So regardless of what happens here, they already have a game plan in mind, and they're already looking at a certain price to either push bullish or bearish. Okay, so let's hop over to the charts. Let me know if you guys have questions, put them in the chats. If not, I'm going to show you guys my trades for the week. And then, of course, actually, what I'll do is I'm going to show you guys like a quick market overview. We'll go through gold, dollar, etc. I'm going to turn off the YouTube stream. And then for Chart Addicts members, I'll show you my trades for the week. Deal? Boom. Okay. So let's go through a quick round. We can't really analyze any Forex pairs without first covering the DXY. Okay. So I'm actually going to zoom out here to the weekly time frame. I haven't said this in a while, so let's see if I still got it. Let's see if I still got it. A lot of you guys might be new, asking yourself, what are these magnets on the chart? I haven't done this in a while, so let's see if I still got it. It is the proprietary technology of Chart Addicts. It's a super secret magnet indicator. Can't beat it, can't touch it, can't fight it. Undefeated, undisputed, best indicator in the world. If it shows up on your chart, you better drop everything and make a play. Now, all jokes aside, let's take a look at what the dollar's been doing. So ever since I've been trading, damn near, the dollar has sort of been teetering between this sort of like a 95 to 103 range. So when I first started trading here in 2019, like I would say like taking it real serious here, the market was consolidating. Okay, we had obviously some externalities on both sides, but then the market ended up recovering back to about the same range. This whole period here, I like to cut out of my analysis because this is the COVID era. We had 14 years of zero interest rates. And then in 2022, we decided to start raising rates. Okay, so this is obviously a reaction to that. But then whenever you see this consolidation ranges, this is the average healthy range that the dollar needs to play in order for global trade to function. If the dollar is too expensive, then foreign countries can't buy US goods. It's going to cost them too much of their local lira or their yen or their yuan to buy US goods. If the dollar is too weak, then we have a disadvantage in export or in importing foreign goods. It's going to take us way more dollars to go buy Japanese goods and German goods and Korean goods. So we need a healthy range that the dollar is stable, and that's the Fed's job. It's maximum employment and price stability. Price stability means we got to keep price in a box. Anyways, so what we've been seeing here is that a deliberate attempt from the Trump administration to devalue the dollar. Now, my sort of like, this is like my gamble. This is like my thesis or hypothesis that I'm going to tell you guys publicly here on YouTube that you guys can hold me responsible and accountable for. Is I believe that the Trump administration and maybe even future administrations, if JD Vance wins, are going to try to inflate our way out of the national debt. So we have $32 trillion in national debt. If we do value the shit out of the dollar, then it's going to cost us way less in future value to pay off our debt. Yes, we still owe the same 32 trillion, but 32 trillion ain't the same as what it used to be. So consider like bread used to be like 15 cents for a whole thing, or like a burger used to be 5 cents back in the 60s. Same burger, same size, same everything. It's now $10 at McDonald's. And so what the Fed and what the government might do is overprint the shit out of the US dollar, inflate the debt away, and then we'll basically owe about a quarter or a half of the purchasing power of that debt. So I'm bearish on the dollar for a little bit, just at least in terms of the next 8 years. But over time, the dollar will be bullish because we can't outrun the beast that we've created. We lent everybody money in dollars. We enslaved the entire world under the dollar debt system. And now everyone owes dollars. If you want to get out of the US debt, someone has to take over your US debt, which means they have to buy dollars. And so we can never escape this cycle unless there's whatever Ray Dalio described in the changing world orders, some kind of conflict of superpowers, whatever. I hope this isn't too complex. I haven't seen you guys in a while. There's a lot of shit going on. This is the nerdy shit that I spend most of my time doing. If you don't like this stuff, then go kick rocks. I don't know. Let's go through some kind of expectations here for the markets. All right. So markets typically, like, I don't believe in the efficient market hypothesis that markets come back to equilibrium. However, in the terms of the dollar, I actually do. And so despite the fact that we've had a significant drop out of the range, and we might actually have maybe even one more drop, I do believe the market will come back into this 100 to 108 range. Okay, the same range that we've been playing in since 2022. And I do believe the dollar will come back up, but based on the erratic policies of the administration, you really want to wait and see as opposed to try to predict. But if I had to make a prediction, I would definitely say dollar is going to rebound back into the range. Okay. Now, I know this is kind of messy here. I have a lot of annotations for some reason, but Chart Addicts members, you guys will know exactly what I'm pointing to here. We've had 3 touches so far on the 88. Okay. And this is no different. We've already hit the first take profit. The next take profit for USD JPY is actually 152.5, which means the dollar has a little bit more room to the downside. USD JPY moves the exact opposite, right? It's counter correlated with the DXY. And so if I expect that the UJ will go to 152.5, that means the dollar will go down a little bit before it pops off. Okay? There's some correlations here, and then I guess I'll do gold and crypto, and we'll call it a day. All right, let's take a look at Bitcoin real quick. Obviously, I have my levels here. Been watching the charts for a few years. I have made some significantly impressive calls, including not this one. This was not an impressive call. The Bitcoin halving. This was a prediction I made that played out exactly perfectly. We first had the touch at the Bitcoin halving, then we had the push to the upside, we had the push down to the downside here at the 48,000 range, and then we've had this continuation ever since. Now the market has exceeded my expectations, and it's repeated the cycle again. Consolidation, right? Duck, duck, goose. We hit support, we blow through, grab stop losses, and then we make a continuation. So now that the market has created a new range, I want you guys to sort of look at this the same way. We have a consolidation range. We want to see a break to the downside here, maybe retesting this 100,000 level. And that's where we'll be able to pick up some entries along the way. Now, personally, I don't think I'm going to get rich trading Bitcoin or buying Bitcoin on spot, which means that there's no leverage involved. So what I'm going to do instead is I'm going to trade cryptos on margin, like using leverage with one of my brokers. And then I'm going to take that money and then invest it into meme coins. Now, 90% of the meme coins will go to zero. A few of them will do decent, and I only need one to do exceptionally well. And then what I will do is convert that into Bitcoin and have much, much more Bitcoins than if I had just bought it. Now, if you're paying attention, you're welcome. If you're not paying attention, then for God's sakes, what in the fuck are you doing on this stream? All right. Thank you guys for pulling up. What I'm going to do is I'm going to go on with the Chart Addicts members and do a private call here, show them my trades for FX, show them my trades for NASDAQ for the week, and let's get the show on the road. If you guys have any questions, reach out to us. If not, were you even listening? Take it easy, all. Happy and safe trading. Peace. Oh, drop a like and subscribe on YouTube. Don't be a bomb. All right. Coolio. Members, here's NASDAQ real quick. I'm actually going to do like the laziest shit that I've ever done. Let's do this. Let's do